And here are the crypto top headlines. Ripple says security incident accelerated its acquisition of Fortress Trust. Next, one analyst says 75% chance of Spot Bitcoin ETF by the end of this year, and already 2 applications for Spot Ethereum ETF. Also, was it a coincidence that on the same day that the court approves the sale of FTX's digital assets of $3.4 billion, Ethereum had the second highest on-chain activity in its 8-year history? And Binance ends support for Polygon NFTs and Sandbox staking program. Stick around to find out when you need to remove these from Binance. Welcome to Crypto Top Headlines, your trusted news source for all things crypto. Our first top headline is Ripple says security incident accelerated its acquisition of Fortress Trust. A multi-million-dollar security breach involving a third-party vendor hastened Ripple's acquisition of Fortress Trust on September 8th. Now, Ripple announced this acquisition on September 8th, and I'll go through this article briefly here. It says, Ripple acquires Fortress Trust, expands license portfolio in the U.S. Financial technology firm Ripple is expanding its portfolio of regulatory licenses in the United States with the acquisition of Fortress Trust, according to an announcement on September 8th. Fortress Trust provides regulatory and technology infrastructure for blockchain organizations. The company holds a Nevada trust license that allows it to custody financial assets. The acquisition is in addition to more than 30 licenses Ripple holds across the country as a money transmitter, along with a BIT license in New York, required digital currency businesses operating in the state. Licenses are a powerful enabler to build and deliver best-in-class customer experiences for enterprises, said Monica Long, president at Ripple. According to Ripple's announcement, the technology and licensing held by Fortress Trust complements its business and product roadmap. Ripple first invested in the company in 2022 via a seed round. The recent transaction amounts and other financial terms were not revealed. And then we're going back to this article talking about the security incident. So it says here, the takeover of Fortress Trust by financial technology company Ripple on September 8th involved more than just an acquisition deal. The transaction was accelerated by a security incident hours earlier involving Fortress third-party analytics vendor. Ripple confirmed to Cointelegraph. According to a representative from Ripple, discussions between the companies intensified last week after cloud tools of a third-party analytics vendor were compromised. In an interview with Fortune, Fortress CEO Scott Purcell said the company lost $12 million to $15 million in the incident. A majority of the funds were Bitcoin, along with small amounts of USD coin and Tether. Ripple, an investor in Fortress since its seed round in 2022, had to step in to make customers whole. This opportunity makes sense for Ripple in the long term. Luckily, Ripple was in a position to act quickly to step in and make customers whole, and there have been no breaches to Fortress technology or systems. Fortress notified customers immediately of the incident when it happened, as they mentioned in their tweets. The incident stirred controversy across the crypto community. BitGo CEO Mike Belshe stated on X, formerly Twitter, that Fortress was not forthcoming about what actually did happen, claiming the company chose to omit facts and downplay the event by saying no funds were stolen. Fortress uses BitGo to custody part of its assets. BitGo said assets under its custody had not been affected. Fortress co-founder Kevin Letnety labeled Belshe's comments as misleading statements, asserting that BitGo was fully in the loop from the start. Moreover, he hinted at an acquisition proposal from BitGo to Fortress, saying, "You appear to be upset that Scott, Fortress's CEO, chose to go with Ripple instead of the deal you proposed." And they showed the tweets here. I guess originally Mike Belshe said, "I can't express enough how upsetting this Fortress Trust episode is to me. I really don't want to talk about it all because it actually has nothing to do with BitGo. But because Fortress was not forthcoming about what actually did happen, we are now indirectly affected." And then Kevin replied and said, "Mike, without breaking the terms of our NDA, You, 1, were fully in the loop from the start. 2, appear to be upset that Scott chose to go with Ripple instead of the deal you proposed. And 3, are now trying to stoke fear among our clients with misleading statements. The article goes on to say, Ripple announced plans last week to invest even further in Fortress's group, including ongoing discussions with parent company Fortress Blockchain Technologies, as well as Fortress Pay. In a statement to Cointelegraph, the company's representative said, Fortress has been entertaining acquisition conversations for a couple of months now with numerous parties as they look to hone in and grow their payments business, in parentheses, Fortress Pay. This wasn't our first time speaking to them about a potential acquisition. So it's interesting that this is coming out now about the security breach, but it looks like it's all been taken care of, and Ripple was able to make customers whole. Our next headline is, what are the odds that a Bitcoin ETF will be launched in 2023? We all know that there are lots of applications in with the SEC on trying to get spot Bitcoin ETFs approved, and wanted to go over a couple of articles here about this topic here. This says the recent victory secured by Grayscale over the U.S. Securities and Exchange Commission has increased the likelihood that a spot Bitcoin ETF will be approved pretty soon. Bloomberg senior ETF analyst Eric Balshanis recently shared a post on X claiming that the possibilities of the SEC approving a Bitcoin ETF have increased from 65% to 75%. He claimed that this change was a result of the unanimous ruling of the U.S. Court of Appeals Circuit regarding the Grayscale lawsuit against the SEC. We all know that here in this other article, the SEC is delayed until October, making a decision on all the spot Bitcoin ETF applications filed by applicants including BlackRock, WisdomTree, Invesco, Galaxy, Wise Origin, VanEck, Bitwise, and Valkyrie Digital Assets earlier this year. The SEC began reviewing the latest slate of applicants from both crypto-heavy and traditional finance firms like Wise Origin, Fidelity, BlackRock, and Invesco Galaxy last month. The applicants hope to launch the first spot Bitcoin ETF, which advocates have argued would allow for greater retail investment in the Bitcoin space while saving investors from the troubles of setting up a wallet or having to buy Bitcoin directly. Today's orders see the SEC holding off on any firm decision, instead extending existing comment periods and allowing for greater public feedback on the applications. The new deadlines for Wise Origin, Galaxy, and WisdomTree are October 17th, and it's 2 days later for Valkyrie. Bitwise now has an October 16th deadline. So it looks like our next update should be coming October 16th, and then October 17th, and then the VanEck and ARK filings for Ethereum ETFs, spot ETFs. Those have been filed, and it looks like the SEC has up until May 23 of 2024. So we've got some time to hear about that. Hopefully the spot Bitcoin ETFs will get approved this year, and the SEC might go ahead and just go ahead and approve all the ETFs at the same time. Although Ethereum, we'll see if they will lump those two applicants in with the other Bitcoin applicants. Hopefully, this will be a big start to getting out of the crypto winter, and look forward to further updates on October 16th and 17th. Next headline, court approves sale of FTX digital assets up to $3.4 billion worth to be unleashed. And on the same day, Ethereum's active addresses hit the second highest in history. And I'll go over both of these here, but I don't think that's a coincidence that happened on the same day that the court approved the FTX digital assets to be sold. This article, assets will be sold off weekly with special handling for BTC, ETH, and insider affiliated tokens. The Delaware Bankruptcy Court has approved the sale of FTX digital assets. Judge John Dorsey made the ruling at a court hearing on September 13th. Major changes were made to the draft order authorizing the sale on the previous day. FTX will be allowed to sell digital assets excluding Bitcoin, Ethereum, and certain insider-affiliated tokens in weekly batches through an investment advisor under pre-established guidelines. There will be limits of $50 million for the first week and $100 million in subsequent weeks. There will be an option to increase the limit with prior written approval of the creditors committee and ad hoc committee, or to raise the limit to $200 million weekly with approval of the court. Bitcoin, Ethereum, and insider-affiliated tokens can be sold through a separate decision by FTX after 10 days notice to the committees and the U.S. trustee. The U.S. trustee is appointed by the United States Department of Justice. Those sales will also be conducted through an investment advisor. Information about the sales will be subject to professional eyes only and confidentiality restrictions, with a redacted version accessible to the public. The sales will be subject to written objection by the committees and the U.S. trustee. In that case, the sales will be delayed until the objections are overcome or the courts order a sale. The conditions on the latter sales were added in the draft submitted on September 12th. They are regarded as cautionary moves to ensure market stability during the influx of FTX assets. Some observers noted, however, that the sales will represent only a small portion of trading volume and may not have a heavy impact, according to a recent shareholder update. FTX has $833 million worth of Bitcoin and Ethereum. According to shareholders' report, FTX holds $3.4 billion in digital assets, which is the top 10 assets the company holds, including Solana, Bitcoin, Ethereum, Aptos, and others. FTX can enter into hedging arrangements using Bitcoin and Ethereum with the prior approval of the committees and can use the staking. According to the guidelines, FTX token cannot be sold without further court authorization. So I think this announcement spooked the market a little bit, especially with Ethereum, because it hit its second highest on-chain activity in the history of Ethereum. So this article says, through an examination of Ethereum's on-chain activity, market intelligence platform Santiment has published a report indicating that the count of daily active Ethereum addresses experienced a notable increase, reaching almost 1.1 million on September 13th. This recent upsurge represents the second highest number of daily active addresses ever recorded in Ethereum's history. The highest count was registered on December 9th of 2022, aligning with Ethereum's reevaluation following its losses from the post-2021 bear market. As a result, analysts at Santiment suggest that the Ethereum market may experience increased volatility, potentially leading to a recovery. Additionally, this uptick in on-chain activity indicates a growing demand for the underlying asset. The Ethereum network just saw 1.1 million unique wallets acting as a sender or receiver of Ethereum on Wednesday, the second highest amount in the asset's 8+ year history. This historic anomaly could be the capitulation signal needed for prices to rebound. Ethereum, the second largest blockchain by market capitalization, is presently encountering immediate market instability after a recent price decline that pushed it below the $1,700 threshold. Nevertheless, Ethereum maintains its position in the DeFi ecosystem and smart contract arena, securing around $20 billion in total value locked. So I think that we're going to see some continued volatility as the FTX assets get sold off. and hopefully that gets kind of trickled out, as reported in the other article, that they're not able to dump it all at one time. They're going to have to sell them kind of in periodic chunks, and hopefully not affect the market too much. The next headline is Binance drops support for Sandbox NFT staking and will soon end support for all Polygon NFTs. And this article, it talks about when you need to have these removed off the platform if you have any of those on Binance. It says leading crypto exchange Binance said it will end support for features related to non-fungible tokens, or NFTs, on September 9th, and for all Polygon-based NFTs on September 26th. The company asked users to withdraw Polygon NFTs by December 31st. It said that users will not be able to buy Polygon NFTs after September 26th, and that all listings will be canceled that day. It added that Polygon NFTs will be returned to user accounts after September 28th. Binance also said it would discontinue its Sandbox NFT staking program, which previously allowed users to stake land tokens and earn sand rewards in connection with a popular Polygon-based metaverse game, the Sandbox. That staking program will end on September 26th, and Binance will automatically unstake users' land NFTs on September 27th. Those tokens will be sent back to users' Binance accounts on September 28th, and the final staking rewards will be distributed that same day. Binance said that the service reduction is the result of consideration and evaluation and part of its attempts to streamline its services. It did not comment on whether trading volumes or user demand affected its decision to end those services. Binance introduced its NFT marketplace in April of 21. It added support for Polygon-based NFTs more recently on March 28 of 2023, and it introduced its Sandbox staking program just over 1 month later on April 28th of 23. As such, each feature was very short-lived and available to customers for 6 months or less. Binance's NFT marketplace currently supports 3 other networks: Ethereum, BNB Chain, and Bitcoin. The company added support for Bitcoin ordinals in May. Polygon Matic will remain listed on Binance. There is no indication that Binance intends to delist Polygon's Matic token from its main exchange. Binance is a major exchange for Matic trading. It handled at least $37 million of Matic's $181 million of trading volume over a 24-hour period on September 8th. Matic is the 14th largest cryptocurrency by market cap, with a total supply worth of $5.05 billion. It is down 1% over 24 hours, while the crypto market is down only 0.3%. So if you or anybody else have these on Binance, go ahead and start trying to get these off, as it looks like they will be ending this support toward the end of this month. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, your trusted news source for all things crypto.